talk about AI options mania and just give a quick look at some of the different flows and the ways that we're viewing some of the different flows around a lot of these popular names. And if I bring up my dashboard here, you can see I have a lot of those names loaded up. They're the big names: NVIDIA, MU, AI, AMD, etc. And there are really two things that we wanted to focus on for the purpose of this conversation. Number one is the extremely elevated implied volatilities. That's kind of the key, I think, in what you want to watch when you're trading these names. And the second one is, what is the actual options activity that's coming in as you are watching or trying to trade these names. So on your screen here, we have an NVIDIA, and what we're looking at is our HIRO chart. Now, if you're new to this HIRO concept, what we are doing, and we are one of the first to offer a product like this, is to show you what the real-time options flow is. So in white is the stock price, in this case, again, NVIDIA. And then purple is what we call the delta hedging pressure. And essentially what happens is every single time an option trades in real time, we're assessing what we think the delta hedging impact is of that order. So if someone sells a call or buys a put, we measure those delta flows. So if this purple line is going down, it's telling us that traders are either selling calls or buying puts. Now, this is not simply just looking at whether a trade hit with a bid or offer. We're looking at a whole bunch of other different things kind of under the hood to estimate some of these flows. Now, if you want to see what's actually happening, you can see that it is a big combination of both call sales, which is orange. So orange is only the calls. And then blue is our put line. So only trades which are puts are measured in that blue line. And you can see in both cases here, what we're seeing is indeed an NVIDIA off the 400 level, which is where we opened this morning. We're seeing that negative delta pressure, and this is helping to push the stock lower. And if you flip through any of these names, it shouldn't be too surprising that we're seeing negative delta flow. It's pretty light flow in AMD, but it is negative. You can see in the right axis here is our notional value. If you look at AI, which reports tonight, you can see there was a little bit of put selling this morning, but pretty consistent call selling throughout the morning. And then, of course, in MU, it's, again, pretty light flow, but again, negative delta flow, which is helping to pressure these stocks. Now, the issue that I talked about before in terms of implied volatility, and this is something that we've been talking about in our founders' notes, is that implied volatility gets so rich that it's almost becomes this, it becomes a situation where it's very hard for options to pay off. You need increasingly larger returns after the stock has gone, just crazy in order to get a payoff off of saying just buying kind of an at-the-money call. And to kind of outline this, I brought this chart up here. This is actually the realized volatility of AI. Again, AI reports tonight, so the implied volatility is extra high. And what you can see is blue is the stock price, and then orange is telling us what the the realized volatility has been of the stock. As you can see, it's around 160%. So the volatility of the name this year, really in general, has been very, very high. It's been very elevated. But the problem is now, when you flip over to looking at how the stock is trading, the implied volatility is now in the 200 or 300 range if you look out about a 1 month basis. And so the problem is, again, if you are buying a call option right now, you are looking for movement now that is compounding the already incredible movement or returns. And so what is happening now is that the options, in our view, almost cannot pay off at the current level. Now, this is assuming you're not delta hedging and things like that. And what we're getting at with this is that if you can't get long the call and make money, even if the stock goes up, then what happens is the calls are really overpriced. And we think that incentivizes people to come in and start to sell those calls, which can lead to negative delta hedging pressure. And if you think about it, even if the volatility or the stock just pauses, right, that volatility is going to come down because you need increasing amounts of volatility to get the payoff to come off of a bunch of these different positions. And I think that's why you're starting to see the negative delta pressure in some of these names. And so whether or not you think it's a bubble or you don't think AI has a future is somewhat irrelevant here because, again, those options are getting so expensive. And so if we flip through some of these names, you'll be able to see what we're sort of talking about in the options positioning. If we look at SKU, for example, this is NVIDIA, and we're going to focus on the blue line here, which is 1 month implied volatility. And this is the Delta 50. So this is a 50 Delta option. And as you can see, as we go higher in out of the money, so this is the 25 Delta call and a 10 Delta call, the implied volatility goes up. So the call SKU has a sort of a bid to it. And that is telling us that there is this major demand for options to the upside, which is not surprising. It shouldn't be surprising, obviously, when stocks had such incredible movement. But the other side of this is it's likely that prices for those options are being bid up because of inventory issues, right? The volatility has been so high that dealers and market makers probably don't want to get caught short to the upside necessarily. So those call prices are going to get elevated. So again, it becomes very difficult for these upside calls to pay off. Now, the most extreme situation that was ever, that was like this historically was GameStop. And if you consider the implied volatility level of GameStop back in the Mania days, back in here, we were seeing, 400% implied volatility levels in situations where you could sell a 50 strike put for like $48 because the implied volatility got so unreasonable. And so these are the situations, and we're not there in this AI space, but these are the situations where the calls are just so expensive, it's hard to justify owning them from a pure long perspective. And again, as soon as that stock doesn't do this, right, this launch mode, those call options start to cool off. And when they start to cool off, we think that leads to pressuring the stock lower. So that is the environment that we're in. We've equated it before to this concept of a shark, and I think it's called ram ventilation, where if a shark stops swimming, it sinks to the bottom of the ocean. And in the same point, if the stock just stalls out, that implied volatility is going to start to sink, right? Because you need these 10, 15, 20% daily moves in order to sustain that 200 or 300% implied volatility. And so that's a major issue for trying to get long these calls here. Now, it's not to say that the stocks can't correct a little bit and then we launch again, right? These bubbles can persist for quite a while. It's just that in this moment of time, you need an additional catalyst. And to that point, again, AI is announcing earnings after the close. So if they blow at expectations, then maybe, who knows, it kind of resparks that bubble and that mania. But like we said in our subscriber note this morning, the weight of the option traders or long traders, I should say, are kind of swimming into the current. So let's focus on some of these names just quickly and look at some of the key levels. If we look at our put and call impact, this is one of my favorite charts here, because what you're looking at is in orange, you're seeing the call gamma at every single strike. And then in blue, you're seeing the put gamma at every single strike. And I like to look at the complete picture. So I like to see all total gamma at all of these various strikes, because at the end of the day, it's true, you do not know how exactly all of these strikes are positioned. But after doing this for so many years, I can tell you that what you see is that the strikes that have a large amount of absolute gamma tend to be magnets for price. They tend to be support and resistance lines, and you will see options flows in real time adjust around these levels. And so what you can see here is indeed there's a ton of positions here at 400. 400 is the biggest strike in NVIDIA. And if we look at the live price and levels, you can see we rejected right off of that level. And now we've traded a little bit lower, and we're right at what we call our put wall. So our put wall is a strike that we think has a support to it. We have some statistical evidence on this on our site if you go to SpotGamma.com. But we would look for some support here after NVIDIA is just kind of cooling off. Now, if the stock continues to get a little bit weaker, the next major level to the downside, you have some at 390 and 380. So there's a bunch of bigger strikes here that could offer some support in the short term for NVIDIA. And again, this space we think is more about cooling off right now, as opposed to having a major and steep correction. We flip over to some of the other big names. Oops, not MAD, but MAD. So if we flip over to some of these other names here, like AMD, you can see it's a similar situation where there's a lot of gamma being built up at near-term strikes. And if you flip over to the top gamma expiration, which is what we display here on the bottom line, what you see is that most of the gamma is now concentrated in the shortest dated expirations, which is another phenomenon here in the meme mania. Part of this is that, AI mania. Part of this is that the short dated call traders are coming into the market. They're generally very aggressive, and that builds up a lot of gamma on a weekly basis that's tied to the Friday expiration. Then those positions will expire. You can see we already calculate 27% of total gamma is tied to Friday's expiration. And then on Friday, all those positions are wiped out, and we kind of restart the cycle. And so these positions build up very quickly, and they're removed very quickly. And so on that note, we note 130 here is kind of this upside, big upside level. We think that's a big resistance strike to the upside for AMD, with 125 being what we call the biggest gamma strike, or the largest absolute gamma strike. And if we look on the day, AMD's actually been trading a little bit lower, didn't quite tag that 125 level, which we call our key gamma strike, and has punched down to this 120 level. Now, again, just to be clear, you see the absolute level of gamma here in these bars and this sort of histogram on the axis here, with calls in orange and puts in blue. And so you can see, again, the price is stopping at 120, which is this big options level. And then lastly, the other one, which I thought was pretty interesting today because it's kind of bucking the negative trend, is Broadcom. Now, Broadcom is not a huge options name. It does have a decent amount of options activity at key strikes. But what you see here again is that we hit this 120 area, we come and bounce off of the key gamma strike again of this 800 level. So the fact that the price is reacting to these big options levels helps us to sort of inform us that options are indeed an important component of a lot of these names and a lot of these strikes. But again, the key issue here is that as price stalls, as it either comes down and or just kind of flattens out or plateaus, that implied volatility is going to come down, which should continue to kind of keep pressure on these stocks. Now, if we, again, get a big beat in AI today, maybe that resparks that AI narrative in terms of opening up a whole new echelon of positive earnings and major upside in these names. And we will see if that comes to fruition. So looks like we don't have the chat thing kind of hooked up here, so I won't be taking any immediate questions on this. One of the things we want to talk about was the Qs in general. The Qs have been outperforming extensively. One of the things we talked about in our founders notes, so if you want to see what those look like here, if we pop over to yesterday's AM founders note, what we said was, again, we framed a lot of what we're talking about here. On Friday, we talked about crazy upside off the fact that skews had been a little wild, but not completely whacked out. And sort of to that point here, there was Friday's skew in green. And what you can see is there is a call skew here, right? And the fact that these out of the money implied volatilities are elevated. But this red line was from November of 2021 when AMD hit an all-time high. And you can see just how crazy that skew was relative to sort of today. And then what happened yesterday with the 5 to 10% rally in AMD and a bunch of the other names was indeed that call skew just kind of went really just full crazy, we like to say. And with that, we let a call not just for these AI names to cool off, but just tech more broadly. And you can see that is what we expressed yesterday. And with that, the thing that we've been watching in our QQQ space is that tech has been leading. That's no secret. But what we saw happen yesterday was that the Qs started to outpace its options positions. And based on that, specifically 350 was our call all level. Based on that, we said, hey, Qs are now too extended and they're due for sort of a pullback here. And that's what we're getting really is that if we flip over to the Qs, we could do that here in the indices page. What you'll see is that there's indeed a lot of positions at this 350 strike, which is right here, but the positions past that are really rather small. And if you add to that the sort of rich implied volatility, what seemed to happen is we just got really overextended in a lot of these names, and we are due for some consolidation. And I think a lot of people would probably argue that some consolidation here is maybe warranted or even healthy, right? We can kind of rebase and restabilize. And so with that, we're looking for the S&P to kind of pick up its outperformance a little bit versus the Qs based on the fact that we believe a lot of this was overextended. So with that, we will keep it there. This is meant to be a pretty short and quick hot take. Again, the key flows here that we're seeing with implied volatility so elevated. This is actually the HIRO for the S&P 500. But with those implied volatilities very elevated across that AI space, we think it makes sense that we would see some call selling. And again, that's what we saw with a lot of these names like NVIDIA. And so that is leading to a cooling across the board in a lot of these stocks. If AI, the company, blows out tonight, maybe it resparks things. But in general, just sort of this consolidation phase seems like it's upon us. And that will be a hard tide to sort of turn until those implied vols come materially lower. So if you have any questions on this, we'd love to hear about it. You can leave a comment in the section below. You can hit us up at info@spotgamma.com or at SpotGamma on YouTube. And most importantly, if you're interested in trying this out, our partners at Zero Hedge will have a great special offer. If you go over to this page right here, SpotGamma AI Options Mania, I believe it's also posted up at the top of their page. You can get an exclusive 2-week free trial of SpotGamma through them with that link that you see here on this SpotGamma AI Options Mania page. You can also subscribe and get a 1-week trial directly through spotgamma.com. And we would love to see you over in our community. So with that,